Testing. Okay, we're good to go. Evening group. Welcome to the first of our videos on the accounting topics. I want you to cover studying from home tomorrow. Now, this is a topic that we've already covered before, but it would be good to have some revision on it because from memory, I've only showed you how to do the petty cash book. I didn't show you how to do some of the journal entries. So we're going to cover both. A little bit of revision on the petty cash book, along with the journal entries that you need for your assessment task. And to do that, I've got a sample question here, which is not too different from your assessment question. It's a dated question, 10 years old actually, and we have a individual that decided to establish a petty cash float on the 1st of July 2013. And drew and cash check number ending in 204 for $500. So in short, they started a petty cash system by putting in $500. And then during the month of July, they had the following transactions. So just counting the number here, 1, 2, 3, 4, 5, 6, 7, 8. Okay, 8 transactions. And then they reimburse the petty cash float at the end of the month, as they should. Now there's another item here, which says that Laza decided to increase the petty cash float on the 1st of September to $600. Now that's a different scenario, but we're going to cover that as well. Based on this information, we're going to complete the petty cash book first, which is on the next page. Then we'll do those journal entries that I spoke about. One, to create the petty cash float on the 1st of July. The next, to record the expenses from petty cash and the reimbursement. And a final journal entry to increase the amount of the petty cash float. So originally it was $500, then they bumped it up to $600. Before we start looking at each of the transactions, I just want to show you the petty cash book because it's a little different from the one we did in class. Not much, but a little bit. I've already got some details in there to save me some time. I'd say the main difference is the cash received column is here on the left side still, but almost the center. So they have cash received and they have cash paid. The examples I showed you in class, cash received was all the way on the left. So it's still the same idea, just a slightly different format. But here you've got your total cash paid or your total paid and the breakdown of what was spent. And again, to save me a little bit of time, I've got the descriptions in here already. So really the focus is on taking the transactions from the previous page and showing him how to record them in here. So let's make a start. Coming back, we start with the very first transaction, which is not this one, it's this one, on the 1st of July, and that was the $500 to create the petty cash float. Okay, there's our starting point. Next transaction, 4th of July. It's talking about milk and biscuits, so let's see what the number is. Okay, purchased milk and biscuits, including $2 GST. So $33.50. Now, for those that are a little sharp-eyed with GST, you would have quickly seen that that is not 10% of this number. And that's because the biscuits have the GST, not the milk. Remember, we have GST-free products, and which are generally raw produce, raw fruit, vegetables, your basic foods. But biscuits is not a basic. Biscuits is something that's been made and it's like a sweet. So that has GST. Which means they spent a lot on biscuits. Okay. Besides that, let's get that number in there. So $33.50. That was the total spent. And the breakdown is $2 GST. And then we look for our milk and bread account, right? No, you know it's not right. There's no such thing as a milk and bread account. What this will come under is an account called staff amenities, and that's basic supplies for an office: tea, coffee, milk, biscuits, toiletries. And that will be the $33.50 less the $2 GST, which gets us $31.50. Okay. Now for the next one. And if at any point I'm going too fast through this video, remember you can pause it. You're watching it at your own time. But continuing on, we have our next transaction, which is for cleaning. And I can see over here we have a cleaning account. Cleaning expenses to be full. We just need the number and the amount of GST. Okay, so it says purchased cleaning materials, including GST, for $46.20. We come back down, 46.20, and the GST is going to be 1/11th of it, because cleaning products are not GST free. That gives us $4.2, $4.20, which means the other $42 goes in our cleaning expenses account. Is there such a thing? Yes. I would say all the accounts you see here are normal accounts that appear in most financial statements. Okay. The next item, taxi fares. Taxi fares or travel expenses, including GST of $57.20. Okay. Pretty straightforward. Just need to take that number, bring it down here. 57.20. The GST. $5.2. And that means our travel will be $52 flat. Okay, you're probably getting the idea now, so I'm going to pick up the pace a little bit. So we've got tolls and parking. That will probably come under travel as well. I'll just double check. I would put it under there. Or was I going to put it under sundry? Let me think about that for a moment. No, I'm happy with my original thought that it's going to go under travel. So let's get this tolls and parking. Oh, they're saying motor vehicle expenses. I don't necessarily agree, but for the sake of this example, we'll go ahead with that. I would put this under travel or a separate account called parking, but that's okay. We'll follow what it's asking, which is the motor vehicle expenses. That's $49.50. Guessing the GST is going to be 4.5, but shouldn't guess. I should check. 4.5. After a while, you generally know what the numbers are. Postage. That's a lot of postage. What on earth did they post? $69.30. Okay. And eventually you're going to start working at this pace. Just a bit of confidence may be needed and practice. Yeah, again, we've got these staff amenities. There's going to be some bits with no GST. So I need $2.40 of GST for $45.10. Okay. But again, yep, it's quite late here, so I'm going to be a bit lazy. I don't trust my mathematics right now and just do this. There we go. $42.70. Okay, stationery again. So I've got two more items before we get to the pointy end. 72.60. And a little bit more of tolls and parking. 42.90. They must be in Sydney. That would explain the price. Oh, no, Perth. No. I forget how expensive parking in CBD is, but I feel like this is more Sydney. Okay. At this point, you may notice that there's no items in sundries. So did we put one in the wrong account? No, it's just because you have an account that doesn't mean you have to have a number in there for that month. Maybe next month there'll be 3 or 4 numbers in sundry. And just remember, sundry means all others. Okay. Next job is to calculate our totals. So we're going to calculate the total of each line and pop it here. And to save you some mathematics, here's what I prepared earlier, so to speak. $416.30. 35.10. This one's easy. 63. Oops. That should be 84. And this should be 42. But what you should do is you should add up the total of these and make sure it equals this number, the total you have here in cash paid. If it doesn't, you've made a mistake somewhere and you need to go back. Now, in the vocational level, if you make a mistake, we give it back for feedback. But if you're doing this at university, you would lose easy marks. So just take a minute to add these up and make sure it equals this. And I've got to practice what I preach, so here we go. 63 plus 74.2, 66 plus 52 plus 84 plus... Oh, I missed I think I missed 35.1. Here we go. Nice. Okay. Now for that pointy end, where the petty cash book doesn't make a great deal of sense because you start going left and right and all over, but I'll do my best to explain. So balance, CD, means closing balance. And what it's saying is, well, how much money do you have left? You had $500 at the start, you spent 416. How much is left in cash? $83.70. But what we know is it doesn't matter what's in the petty cash book. It should always equal the original number. The original number was 500 on the left. And the current number, if you add up all the receipts and the leftover cash, should still equal 500. If we stick these two together, the receipts and the remaining cash, it needs to equal 500 because that's how the petty cash system works. And you're pretty good at getting that idea in class. I remember doing it on the whiteboard, and you were very quick at understanding that, which was good. Okay. Now this is the weird part. So we go balance brought down now. You bring it over here. And then we record how much money we're going to reimburse. So what we're saying is we need to put another $416 back into the tin to bring it back to 500. So we take $416 of receipts out and we put $416 of cash back in to bring us back to 500. And it almost looks like it's been flipped over, doesn't it? Okay, so there's the petty cash book. Again, this is pretty similar to the assessment. So I hope it helps with your work. And what we're going to do is we're going to look at the relevant journal entries. That shouldn't take too long. It should only take about 5 minutes. But if you want to pause the video now, just to kind of take this in before we look at the journal entries, you're welcome to. For those that want to continue on, let's get into it. So we need 3 journal entries. The first, the creation of the petty cash float. The second is the reimbursement. So when we take out all the receipts of $416 a receipt and put the cash back in. And the increase of the float. Okay. So we can see here, I've already got the template set out. So you can see we've got petty cash, we've got bank. So we're debiting petty cash. What did we get? We got a petty cash tin of $500. How do we get it? We took out $500 from our business bank account. And you might go, but there's no expense here. No, not at all. This is an asset. This is an asset. We're just exchanging one asset for the other. We had cash in the bank. We now have cash in a tin. Just switched one asset for another. Now the next one, while it sounds difficult, it's actually a lot easier than you think. Because you've already got the totals. All we need to do is record them. So debit GST paid, postage, staff amenities all the way down to cleaning. So now we're recording all the expenses. And then we're reimbursing the petty cash tin from our bank account. So another way to say this is when you use a petty cash tin, you don't recognize the receipts every day. You just the expenses every time you have them. You just wait till the end of the month or the end of the week. You take all the receipts out, put cash back in, and then you record the expenses. If you do it every day, it's just too tiresome. I'll say that for petty cash stuff. So here's our numbers. I wonder if I could be a bit sneaky. Copy. There's a translate option. I was looking for a little trick you can do in Excel. That's okay, we'll quickly pop them out. Sorry for the up and down. Okay. At this point, you might be thinking, well, that's just a copy of this. Yeah, and that's correct. But that can't be right. Absolutely is right. Because think about this. Think about what I told you in class. For every journal entry, there's a source document. The source document for these journal entries is this. Now we're not done yet. Got one more bit. And don't worry, this one's easy. So when you want to increase the amount of petty cash you have in your tin, it's the same entry as this. But instead of putting $600 in, we don't need to put $600 in. We've already got $500 in the tin. We just need to increase it up to 600. So we just need to add the difference. I'll put the difference in, which is $100. And there you have it. The journal entries may have been a lot easier than you expected. As long as you do your petty cash book right, then really this is just the kind of the icing on top. So that's all for this video. The next video will be about bank reconciliations, and then there'll be another one on periodic inventory. So thank you for watching, and I'll join you on the next one.